Hello there. Today I was at digitally CPA Ontario's Ethics Summit. So they just had a bunch of speakers and a panel and stuff like that talking about ethics ethics in general, not just ethics in accounting. And it was really interesting, like a lot more interesting than I thought it was. The panel less so, but mostly because I'm not in AI and I don't really understand AI. So less so. But the first person was talking about how a woman in Dixon, in the state, a city in the States, she was the controller for the city and she managed to steal $53 million from this city. Yeah, over like 20 years or something, but still $53 million. And then she talked to a guy, so it was like an interview style. She talked to a guy who had stolen $8.5 million from ING, I think, the company that he worked for, anyways. And he actually went to prison for 5 years, 5.5 years. And then so that she was talking about like whistleblowing, and if we would have the courage to be able to basically call this person out. So in the first story, the woman who stole 53 million, it was actually her direct report who figured it out, basically. It was kind of an accident. But then she went to the mayor with it. And that's how that, like, the whistle was blown. Is that how you say that on that one? And then for the guy that stole the 8.5 million, it was actually his coworker whose password he had used, and it was her name that was actually on all these transactions that had been like approved. Like the checks had been approved, like more than $1 million in a year. And that's how that one was caught. And then the closing speaker was a guy who was caught for insider trading in the US on the Kronos deal. I had not heard of this, but he helped the FBI to build 20 other cases against traders. And then he was basically let off. He was convicted of the felony, of the insider trading felony, but there was no, like, he didn't go to jail and he didn't have to pay a fine. Like, there was nothing like that. The judge said, like, just go ahead and live your life, basically. So he's been dealing with the repercussions of that. Like, he obviously can never work in the industry again. So how does he make money? I mean, now he's on the speaking tour, obviously, but he can't have a bank account. That was a crazy one because he's on the anti-money laundering list. So he sets up a bank account, and then like 30 days later, the bank sends him a note. It's like, hey, you need to close your bank account, which is not funny. Like, I laugh, but it's not funny. Like, how do you operate if you don't have a bank account? And like, obviously his wife was really upset because she has his last name. I mean, obviously she was upset because he did it, but she shares his last name. And so like, she was going to get fired because her boss didn't want her to have anything to do with it, or like didn't know if she had anything to do with it and didn't want her name associated. And he can't coach his kids because he's been convicted of a felony, even though it was insider trading. He still can't coach like his daughter's soccer team. And so I think so that like all of this had like the fallout of doing these things. And we all know, insider trading is bad. Like, don't steal from your employer. That's bad. But it was interesting to hear their stories because like the people that are stealing, they knew they were stealing. That was bad. They knew that. They knew they were going to get caught at some point. Well, the woman who stole 53 million seemed to think she was going to get away with it. But actually, it was the woman who created the video, All the Queen's Horses, the filmmaker who did that. That's who spoke this morning. And that was about the Dixon story. Anyways, I'm getting off topic. So the insider trading guy, Tipper X was how he was known in the States. He had received this call from somebody that he had in the industry that he had been in contact with, that he knew, and they had been calling him and giving him like rumors on stuff like, hey, this was happening in Silicon Valley or whatever, like mostly just rumors. But this was a very specific information. It was like this company, this date, this price. Like, I know the roommate of an analyst at Moody's or something. And so he thought to himself, he was like, oh, like this is probably nothing. And like it's probably bogus information. So then he tells a friend of his who is another trader, and then that guy like makes a big trade based on this information. And the guy who was like Tipper X, the guy who was talking, his name is Tom, by the way, Tom Harbin. He was sort of thinking to himself, like it's a victimless crime, and oh, it's actually like the trade that he made was immaterial because it was 0.9% of the total funds that his company managed. And he talked himself into this idea that it was actually gonna be fine. He wasn't really offside. He was just like going, I don't know, 30 kilometers an hour in a 25-kilometer speed zone. That's what it's called. Like he was just a little bit offside, but it was fine. Like everybody else was going to be way more offside, so it's fine. And that thought process scares me a little bit because I think sometimes it's hard to know if you're doing that. Like, I think it's hard to know if you're like sometimes it's really easy. Sometimes you like feel it and you're like, I am rationalizing this. And then you can kind of take a step back and then apply an ethical framework to it and make a decision and really put your brain to it. But I think it's those decisions that end up being within that ethics realm that we don't really understand as ethical that are dangerous. And he used the word immaterial, which accountants use all the time. And we don't use it to be like, oh, it's just immaterial, like whatever. But sometimes that happens because it's true, because sometimes it is true that, you know, if you've got financial statements, for example, and the company makes $1 million a year, the idea that you're going to go looking for $100 error, well, that really is immaterial, because if you had $100 difference in a financial statements that are, you know, netting $1 million in a year, is not going to change the user's experience. The person reading that financial statement is not going to change their decision based on $100 change because it's immaterial. And so that is a concept in accounting. Materiality is the way that auditors decide whether to suggest an opinion, like whether they decide that the financial statements are like not okay or not. I'm trying not to use technical terms for this. And it's a real thing. And in audit, they will say, you know, materiality is 5% of, I don't know, monthly sales, and then they'll reduce it by the risk factor. And like, there's a lot of things that go into calculating what exactly materiality is for an audit. But I think it gets a little bit more gray when you're in practice and you're in small business, for example. And you just have to be really, really careful about making decisions without really understanding the impact of them, or making decisions because you've rationalized something but you didn't realize you were doing it. And that's the thing I think that not we as accountants, we as humans can get ourselves into trouble with. I think that saying of like, it's not the things that we know that will get us in trouble. It's the things that we know for sure that aren't true. I think, is that like Mark Twain? I don't know. But I think about that, and I really, really work hard to make sure that I don't get caught in that. And that when I'm making decisions, that they are very conscious decisions, and I'm, you know, doing the research that I need to, and just making sure that I'm on side, because being offside ethically is one of the things that scares me the most. So I think that's partly why this summit today was so interesting, was to listen to the people that have been offside and how they got there, because I don't ever want to be there. Tell me a story about ethics in your life and how maybe you've made an ethical decision, or maybe something happened that you weren't the most ethical. Yeah, let me know. I'm so fascinated by this decision-making process, and I'd love to know how this happens for you, and if it's how it's impacted your life. I hope you're doing well, and I'll see you tomorrow.